Let's look at this 5G ETF, or we could call it the next gen internet ETF. Anyway, first off, read this disclaimer carefully. Then do your good deed of the day by liking and subscribing. So, under communications here, we have this next gen connectivity ETF. It is at 10-ish% here from the 52-week low, but still minus 21% away from the highs. But we can see that from the highs, it is beating these other ETFs. So here is the chart, all the data we get here from the weeklies. We do see that there's a pretty substantial rounding top here, which is for all intents and purposes a pretty bearish technical pattern. If we go here to the daily data points, then we can see that this blue 100-day moving average is a very big deal. You can see here with these blue arrows that the 100-day was very viable when it was support, but the red arrows shows that the same moving average now has become a pretty solid resistance level. So the bears are basically in control at the moment, and they are just using that moving average to initiate new short positions. So what we see here from the most recent rallies, this one in May here, and we also see the rally here back in March, is that as we approached the 100-day moving average, the bulls, they just ran out of fuel, and you had bulls taking profits, and basically we were not fully able to even test it. If you look at the most recent rally, we see the same thing as we approach that super key, historically very important moving average. We just lose out of bulls. So the bears are basically just in control at this point. When we look here at these other indicators here on the weeklies, the MACD here is very close though to sending a buy signal. So that is potentially an interesting development. There will be people who act on that. Looking at RSI, so weekly RSI has now pushed into the same territory that triggered this sell-off here, and not that far away from this either. So it's a place where we have seen in the past that the bulls run out of fuel. Here on the daily data points, looking at RSI, we are actually a bit above the previous fail levels. So that is initially a bit interesting, showing us that there is slightly more ferocity now from the bulls than what we have seen in the past. Looking at the purple PPO here, which measures the distance between price and the 20-day moving average, we are now at a previous fail level. So that is an issue. So I give the bears here a -5 on the technicals. As long as the 100 daily moving average in blue holds as resistance, the bears have a pretty good setup. They know exactly where to put in their shorts and their stop levels, and as long as it continues to work for them, then they have no reason to stop. But on the other hand, if they were to lose such an important moving average, that would spook them, and if they close out their short positions, then that will add fuel to a rally. So there's that. Looking here at seasonality, we don't get any data here to the right. To the left, we do see that we have 4 years of data. July is it's one of the strongest months, closing higher 100% of the time. So far, we have seen a decent rally for July, so that seasonality has played itself out. Looking at August, we do see that it closes higher 67% of the time, but on average, there is a bit of a loss, and September is one of the weakest months. I give the bulls a 2 here on seasonality. The problem for the bulls is that we have already seen, a substantial move in this ETF. Hence, there is the risk that some of the bullish seasonality has been sort of used up. And August is a bit messy, and then you have September, which is pretty weak. So it's a bit messy from a seasonality perspective. Looking at fundamentals, here I am comparing the 5G ETF, the Defiance Next Gen Connectivity ETF, with the Vanguard Communication Services ETF. Looking here at performance, we do see that year to date, the VOX ETF has lost a lot more than the 5G. We also see here that the beta is actually a bit higher here for the VOX Communication Services ETF than 5G. Then from a PE ratio perspective, we do see that the PE is meaningfully higher. Dividend yield is actually a bit higher, so it's a bit messy from fundamental perspective. Some pros and some cons here. So 89 versus 112 holdings. Here you can see the sector breakdown. Electronic technology and communications is pretty big. If you look here at this VOX ETF, even though it is called the communications ETF, we do see that according to VetaFi, they classify only 20% of the stocks as communication services. 45% is tech. So this is why the ETF space is a bit messy, because you need to really look a bit deeply into the ETF structure to really get a gauge about what it really is. And here you have the market cap breakdown, which is pretty similar. I give the bulls 2 here on fundamentals. It is interesting, especially when we compared it, to the obvious, alternative, which is the broader communication services ETF. Now let's look at relative performance. So here we do not get any correlations from a longer term perspective, but we do have a little bit here. But given the limited amount of data here on the weeklies, we need to be a bit careful. And when it comes to jumping to conclusions. Anyway, there is a 98% correlation here between this ETF and the S&P 500. 98% also with the technology ETF XLK. And then you have 91%, so actually a bit less here, well, quite a bit less with the communication services ETF, and minus 38% here with the dollar index. Daily data points. 97% with the S&P 500, 99% with the XLK, 98% with the communication services ETF, and minus 90 actually here with the dollar index. So a very sharp negative correlation here. The strongest correlation we do get is with the XLK. So what happens with the XLK is very likely going to affect the 5G ETF. So here is the XLK chart. Here we do have a bit of a different pattern. This is more of a head and shoulders pattern. So here you can see the head and the shoulders. And we have seen, a pretty sharp sell-off here. And there's been this rebound. The issue for the XLK is that if we go here to the dailies, the 100-day moving average is a big deal here as well. But in this case, it's a bit different because it recently had this big thing with the green 50-day moving average, which it has actually broken out above. So there's a bit of a different dynamic here. But when we look here at the PPOs and also the RSI here on the dailies, we do see that we are in a territory that previously has stopped bulls. Here I am comparing the 5G ETF with the broader technology ETF. So we do have something that is a bit, rounding-ish, rounding bottom-ish here. So that's something that could become beneficial for the 5G ETF for sure. When we look here at the daily data points, then you can see that there are these time cycles. So let's draw them in to see how predictive they are. Yeah, so this security definitively this pair moves in these time cycles, but the time cycles have this differed in duration. But looking here also at the RSI, you see that it uses both the high and the lower end of the range. So that is quite beneficial in the sense that it becomes easier to trade when it has some predictability to it. We don't get any seasonality. Here I am comparing on the weekly data points the technology ETF XLK with the S&P 500. So in this case, there is definitely the risk that we might be forming a very substantial head and shoulders pattern, very broad shoulders, but nonetheless, this is a pattern that is dangerous here for the bulls. So the bulls are rallying now, but they definitively need to strongly break out above the highs of the left shoulder. If they are rejected at that level, then we will have a multi-year head and shoulders pattern, and that will be bad for the technology sector. So let's look a bit here at the seasonality, like that. So in green here over the last 5 years, blue over the last 7 years, and red over the last 10 years, we do see that technology usually weakens against the S&P 500 heading into the 10th of August. But from that point, it usually strengthens a bit. So I give -3 here on relative performance. So we do end up with a -1 here in favor of the bears on average, all things considered. The thing is that the 100 daily moving average is the key entry signal stop loss. So as long as we have that resistance levels, then this is basically in the favor of the bears. However, there's a big but. If the bulls were able to break out above the 100 daily moving average, or at least to challenge it more seriously, and then we would have bears really start to tighten their stops on their shorts, and that could become quite self-reinforcing. So the bulls, they have an opportunity here, but currently the bears have the easiest setup. So we have some time left now, so I thought that we should just scan through some securities in the broader, communications space. So of course, in order to make a decision, you need to look for an interesting opportunity, but also, go through the seasonality, fundamentals, relative performance, and really go deep dive on technicals. So this is, more superficial, but anyway, here is Meta Platforms. We are seeing some low-ish formation here. That's interesting. It's been through a substantial sell-off, so it's about time. Let's go here to Twitter, definitively being in the news in a big way. So it fell down to the level that it was at, before the whole Elon Musk acquisition. And I put out a message on Twitter that I thought that it was pretty buyable at those lows. Yeah, and yeah, we have seen a rally from that, plunge. So definitively, this is an interesting low level for Twitter. It's of course very hard to know what's going to happen with Twitter. I see that from a technical perspective here, the blue 100-day moving average, well, temporarily shortable here, but then the bulls came back with a vengeance. But recently, it's been a very easy level for the bears, so that is definitively the key level at this point. Let's look at Snap, also definitively being in the news. Yeah, major sell-off. You could make a pretty strong case that this looks like a double bottom. Very much so. So that this is an interesting setup from a bit more, of a bullish perspective. So double bottoms, they have sort of worked out a bit in the past here as well. Like here you have a low, here is a low. But yeah, so that is Snap. Here is AT&T, more, classical vintage communication services stock. Yeah, it has fallen down to a very low level, a low that, looking at it historically, like that. Okay, that's a big arrow, but you see that back here, buyable. So basically, it's a low level that it has attracted bulls in the past. So it's interesting. It's more interesting from a bullish perspective than bearish. For it to become more interesting from a short, I would like to see the prior support levels, those horizontals I just highlighted, become resistance. And finally, we have Verizon Communications. Yeah, so you see here that we had a very ugly sell-off this week. We have fallen down to horizontal support, but the bulls desperately need this support to work. We are so close to losing that level, and losing that would be really bad. Really bad, frankly, because there's a risk that we could form a monster head and shoulders pattern. That would be really bad because this is a, it's been like almost a decade in forming. So yeah, we have gone through a bunch of interesting opportunities here. Yeah. So whatever you do, of course, you want to use stops and be disciplined and never accept any kind of significant loss.